Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. UniCredit third quarter profit beats as investments pay dividends, but acquisitions remain elusive. We bring you details as European bank earnings season kicks off. As Chancellor Rachel Reeves watches Britain's cost of living closely ahead of her upcoming budget, we'll break the latest UK inflation print shortly. Plus, gold and silver stabilise after suffering their steepest sell-offs in years during Tuesday's session.
Certainly all something we're going to digest, but let's talk about how it shows up in the cross-asset picture. I'll start with the bottom up because you're starting to see after that hit, Anna was just talking about a little bit of a rebound in the metal sector. Does it erase the losses from yesterday? Not quite. To me, I think what's more interesting is the risk-off sentiment you're seeing in the futures picture. Your Stocks 50 futures down 0.5%. You're seeing a little bit of a bid into the bond market as well. U.S. 10-year, 396. The countdown to the opening trade starts right now.
Wednesday morning, good morning. Gold's taking a breather. That means we could probably talk about inflation. Inflation's going to be a big theme over the next couple of days. Obviously, the big print coming out of the States Friday is going to be a big focus of attention. Today, though, we get UK data. And I think at the margin, slightly better news?
Yes, absolutely. Yes, if you are, like most people, wanting to bring inflation down, then yes, 3.8% is the number we have for the headline inflation print against an estimate of 4%. So that's lower than expected. It doesn't start with a 4, which psychologically perhaps makes a difference. The core number also 0.2 of a percentage point lower than anticipated. The services number, crucial for the UK economy, also moving, at least not in the wrong direction, staying at 4.7%, so not on the rise. And we see a drop in the pound as a result of this. Not a huge one, but it's been quite stable. It's now down by around 0.1%. And, maybe this makes it, there's fewer barriers to cutting interest rates, perhaps, for the Bank of England. Might be one conclusion from slightly weaker data coming through on the inflation front.
There's an expected pickup maybe still coming through, though, maybe over the next couple of months. It's interesting. Anna Andrade over at Bloomberg Economics has got April as the first cut. She expects that probably to come at the beginning of next year at some point. April feels like the most logical point in time for that to happen. Does this bring that forward? I don't know. This is basically fairly static. I need to go into the details and see exactly what's been happening on the services side. We think that probably airfares was a contributing factor there. So we'll just look into that and see what's going on.
And this is, of course, ahead of the key fiscal data that we're going to get next month. We're about a month away, I think, from the UK budget as well. Does the dial shift materially ahead of that commentary? And that's just the economic front. We got plenty of earnings to work through as well when it comes to that story.
Shall we go to that? Because we've still got a month to talk about the UK budget.
We do.
So let's not do it all, have all that fun in one day, Kriti. And of course, the budget will be relevant perhaps to Barclays. So let's go to that story.
Let's go to Barclays. I mean, two massive redheads crossing the Bloomberg terminal here. They're launching a $500 million share buyback. This is crucial as well. They're talking about third quarter investment bank revenue that's coming in slightly higher than expected, a £3.08 billion number there. The estimate was about 3.05. So not a massive gain, but certainly one that is showing up pretty well. Some good numbers across the board here. I'm just looking at ROTE for 2026 here that is looking at about 12%. Across the board, there's some pretty strong numbers from Barclays. It looks like they are starting to see perhaps a little bit of provisions that they have an increase of when it comes to the motor finance story, but the rest is pretty strong.
Yes, and the number they're attached to that is smaller than for some of the others in that field. So £235 million in motor finance redress. That follows the high-profile court case, of course, on that front. Interesting, and they are guiding higher for 2025 in terms of their net interest income. So that a bit of a positive coming through then on the Barclays side of things.
I'm just trying to look through the trading numbers, just to make sure that I've got this correct, because it looks like they're both a little light. Equities revenue 689 versus an estimate of 766. I just want to make sure I'm looking at all the right things here. FIC revenue 1.26 versus an estimate of 1.22. So it looks like FIC's ahead. Equities probably aren't. My understanding going into this was that the estimates were seen on trading as being actually low. So if we haven't matched, I need to just double check this, but if we haven't matched these, then that may be perceived as not necessarily a good thing.
Third quarter equities revenue number is below the estimates. So, certainly a point of conversation with CS Venkatakrishnan when we speak to him.
Absolutely. It's not the only other bank earnings that come out this morning. In the last hour, we had UniCredit that hit the wire as well. Strong numbers across there as well. And remember, they've just come off of a series of banking bids that were unsuccessful. So they have a lot of cash to do something with. Looks like they're reporting third quarter profit and revenue, beating estimates across the board. Net income rising to about 2.6 billion euros. Andrea Orchel, the CEO, saying they're on track to deliver their best year ever and confirming their guidance. So I think it's fair to say that we might just expect some pretty decent gains in the banking sector when in the opening trade.
There's consolation for the fact, I mean, they're getting dividends from all these investments that they are making. And so in that sense, those investments, as they are at the moment, they're not deals. Those investments are paying off. But he has been thwarted on the deals that he's been trying to do. But maybe this is some kind of compensation.
So if you talk to your shareholders and go, look, we can hold these things, they're okay, they generate a return that is kind of a fairly decent return. That's a good use of capital, is it? And I think that's the question that I think investors will ask going forward from these. Are these going to transform into deals? Or if they're not, what are you going to do with them? Or do we just see them as investments? And what does that mean?
Yeah. Should we talk about markets more broadly?
Yeah.
Shiny things.
Yeah. So I think shiny things are a useful kind of sidebar to what is happening, I think, in the wider market story. We've talked already a lot this year about what's happening with momentum. You can track this stuff on your Bloomberg. It's fairly easy to do with the factors to watch functions. Momentum has been by far and away the biggest trade. Yeah. And yesterday we saw potentially a crack in that narrative emerging in terms of gold. We can talk about the debasement trade. People have a view of the debasement trade. Is that what has been driving it? Possibly. But there's also been an awful lot of momentum in the gold trade. And if that starts to come out, does it come out in other assets? And I think that's what a lot of people are going to be watching out for. Momentum has been super strong. It had a very bad day yesterday. If this, as a key driver of markets broadly, starts to falter, then potentially other asset classes and the correlations. And you look at the correlations at the moment, everybody's in the same trade. So if one goes, do we start to see maybe effects being felt in other ones as well?
Yeah, absolutely. I mean, and looking specifically at the shiny stuff, because that did dominate a lot of the headlines yesterday with these, most in years drops that we saw 6-8% at one point for gold and silver prices. I mean, it's just impossible to say right now whether this was just a pullback based on positioning and whether we're back to the races again. Because right now, gold and silver actually have stabilised, haven't they? And they're on the rise just a little.
They are. And I think it's fascinating. We had Peter Kinsella yesterday join the program. We were asking him, and he was very bullish on gold. He said, we're using gold to hedge a lot of our macro positions, especially when it comes to a frothy equity market. But he said that it was an equity downturn that could be what triggers a massive sell-off. Now, a couple hours later, of course, we had a 6% decline in the gold picture. You brought up the correlations. I'm just running it on my terminal here. On a 3-month rolling correlation between the S&P 500 and gold, it's actually negative, down 0.3%. It's not a significant enough correlation to draw a conclusion from, but just the fact that it's negative, to me, is interesting.
Everything's been rising recently. Yeah. Everybody's in the same trades. Everybody's been pushing these things pretty hard. Are there relationships between them? Maybe on the kind of basis of what you're seeing in terms of the correlation trackers, maybe not, but it feels like there is. Kind of just naturally, it feels like there are relationships between these trades. And it feels like liquidity is a big factor behind all of them.
Yeah, and we're asking questions on a number of fronts, whether we're seeing bubbles in equity around AI, whether we're seeing bubbles in gold, whether we're seeing a bubble in private markets. And the links between all of those three are interesting to watch. And Peter was flagging one of them, which is what we've seen in the past, isn't it? When you see, margin calls on stocks, people sell what they can, not what they want to sell, and they sell gold, and we see it drop. That wasn't yesterday's story, but the links between them is something we'll certainly
But people
watch.
are pointing out, and I think it was Goldman Sachs yesterday, talking about the weird relationships between the various asset classes and the fact that we're in a weird market. This is a sort of a new market with different correlations and different kind of relationships between asset classes. And that, I think, is the interesting bit going forward from here is when things start to kind of wobble in one, what are we going to understand and see maybe in others about what is driving them? What is the real rationale behind some of these trades? And I think gold, we're guilty of this. Journalists like to tag narratives onto things, and I think the market does as well. And we've got this whole debasement trade. But is it a debasement trade or is it just a liquidity trade? And I think we're going to find out.
Yeah. And we're going to have a lot of interesting earnings conversations to help us do some of that.
Yeah. We should probably just mention as well the Bank of England. The Bank of England's warnings over the last few days have been really amazing. Yesterday, Bailey was sensational in terms of what he had to say, and the warning we got a few days back on the AI trade was amazing too. We've got lots coming up on the show. 2 earnings interviews coming up. CS Venkatakrishnan from Barclays is going to be joining us. Gregory Poux-Guillaume, Akzo Nobel's CEO, is going to be joining us as well. We'll also be speaking with Maria Weidmana, State Street Equity Research Head, very, very long equity tech, but also kind of a barbell on that. Adam Dent, Santander CIB UK Chief Rate Strategist. We've got inflation data, and Ollie Hansen, Saxo Bank's Commodity Strategy Head, is going to be joining us very shortly to talk gold as well.
Lots of data, auctions, earnings coming up ahead as well. Plus, of course, some speak from the ECB. Christine Lagarde due to make some comments in Frankfurt about 1:25 p.m. UK time. Very specific there. The earnings front, though, as Anna was mentioning, is probably what's going to be driving the story this week. We do have carrying earnings after the bell. This is really crucial here. Remember, luxury very much in focus. They're talking about a big makeup deal with L'Oreal as well, something that LVMH is starting to. We're getting reports that LVMH might be looking at as well. It's interesting to see where carrying has to say on that front. Plus, of course, in the States, 6 p.m. UK time, $13 billion auction. Is there demand for the long end of the curve? We will find out today. And then, of course, the earnings story continues over in the States. IBM, Tesla, and SAP, that's relevant to our region.
Yeah, absolutely. And when we're thinking about tech, we can look back to Netflix earnings. We can look ahead to the numbers that are coming out that were just on that day book there around IBM and Tesla. We can also think about OpenAI news. We'll be talking about that later on in the programme. But Texas Instruments stood out to me as well as one to keep an eye on. They had numbers out last night and a bit of a sluggish outlook, and the stock dropped 8% on that. And I wonder whether we keep an eye on some of those European chip names as a result.
OK, we'll do all of that as we work our way through the morning. What else do you need to know this Wednesday morning? OpenAI, as we've just been mentioning, launching a browser that it hopes will challenge the likes of Google and Microsoft. The browser, called Atlas, will include a ChatGPT interface and features a mode that will allow AI to take control of the mouse and the keyboard. You ready for that? It will complete tasks on the computer. Alphabet shares down on this, certainly down when OpenAI teased the launch. Heineken has narrowed its profit outlook on lower consumer demand. The third quarter beer volume fell by 4.3%, more than expected on weaker growth in Europe and the Americas. And L'Oreal's ADRs fell after disappointing sales growth in the last quarter as weakness in the United States outweighed signs of improvements in China. A pickup in demand for high-end beauty products in mainland China helped lift sales by 4.2%, but analysts had been expecting a gain of almost 5%.
Whilst we're talking about all things beauty and luxury, perhaps let's talk about Hermes. Third quarter sales at constant FX up by 9.6%. So come in a shade above the estimate of 9.3%. We are ever alert to what they have to say about what's going on in China. And actually, the Asia-Pacific number for revenue just a touch above the estimate. But, you know, maybe that's enough, 6.2% higher against an estimate of around 6%. And they've appointed somebody new for menswear. So there's lots going on at Hermes and lots going on within the luxury space. And we'll get to some of those themes later.
It's fascinating because when we talk about luxury, we tend to talk about, to your point, the China effect as well. But there is a massive French political situation hanging over these companies as well when it comes to the tax hit, when it comes to the currency hit as well. So I'm curious if that's something that starts to show up more and more.
Yes, and mostly these businesses are much bigger than the French economy, aren't they? Yeah. Or much detached from the French economy. But when it comes to tax, that quickly unites the two. Let's tell you what's coming up on the programme. A lot of talk about tech then, including a look ahead to some of those earnings from SAP, Tesla and IBM. Plus, has gold lost its shine? We'll certainly discuss that. Up next, though, we'll catch up with the Barclays CEO after the bank's latest earnings print. If you want to get involved in any of these conversations, IB plus BBTV Go. That is the function to use this beautiful morning here in London. This is Bloomberg. Welcome back. This is the opening trade. Some of the earnings stories might weigh on the non-UK market, but the FTSE 100 looks like it could stand out to the upside this morning. Futures elsewhere in Europe pointing a little lower, but here in London pointing a little higher than Guy.
Okay, let's talk about Barclays. Out with numbers this morning. Group pre-tax profit, 2.08 billion. That slightly beats estimates this morning. The bank is setting aside 325 million in terms of compensating customers impacted by the UK motor finance scandal. It looks like there's going to be some pushback there. The bank is going to launch a 500 million stock repurchase scheme. So let's talk about the details and exactly what has happened here. CS Venkatakrishnan, CEO of Barclays, joins us now. Venkat, great to see you. Thanks for the time. We always appreciate it. In terms of what stands out here, what are we looking at? I'm looking at trading being fairly mixed. I'm looking at a pushback when it comes to the motor finance story, and I'm looking at a raising of the net interest story going forward. Which one of those three things do you think investors should be focusing on this morning?
Well, I think they should be focusing on the broad performance of Barclays. We had a top-line beat of 11% growth year over year to 7.2 billion on the top line. We've had 9 consecutive quarters of tangible net asset value growth. Importantly, as you said, we've increased our guidance for NII from 12.5 to greater than 12.6 billion pounds, increased our ROTE estimates for 2025 to greater than 11%. We're accelerating our share buyback program by announcing 500 million pounds this quarter and moving to a quarterly cadence. And then importantly, we continue, we've announced that we're going to come back to our shareholders 1 year ahead of schedule and then give them and talk about our new set of financial targets in February from 26 through 28. So I think it represents the broad good performance we've had for many, many quarters now.
Yep. OK, let's dig into the details of what is happening here and talk about what's happening with trading. FIC looks pretty solid and certainly ahead of estimates, but I'm understanding, I think, reading my notes, that the estimates were maybe a little low for what people realistically thought you guys could deliver. So FIC outperformance, but equities not. What happened in equities, Venkat?
Yeah. So I'm very broadly happy with what the investment bank has been doing over 7 quarters. And, we've had 6 quarters in a row of top-line growth, of earnings leverage by having what we call positive jaws and improving profitability. The investment bank produced greater than 10% ROTE, as did all our divisions. Now, within that, I've always said we're running our own race, and we're running our own race and producing the numbers we wanted to. Quarter by quarter, some things will do better and some things worse. We are obviously pleased with our FIC performance, and we'd like to understand better how we can improve in equities. But I view this over many quarters, and so, we take the long-run view. Okay. But, we will look to do better in every segment every quarter.
What do you think the answer is in equities? If that's the question you're asking, what do you think the answer could be?
I think we need to continue to deepen our client franchise. We've been working on it and improve the breadth of our products. We've been at it. We're going to continue, and we will see the results as we've seen in every other part of this bank.
Venkat, it's Kriti in London. Thank you for your time this morning. Let's pivot from the equity picture to the credit picture, if we can. There's been lots of warnings coming from the big U.S. banks around cracks in private credit that could ultimately have broader effects. You have been in multiple seats at Barclays, certainly as the chief risk officer. What are you seeing? Are those worries warranted?
Look, credit is something that you do over the cycle. I think you have to be extremely careful at all points in the cycle about, who your client is, your client selection, the terms under which you lend, your concentrations, how much you lend, industry sectors. We take this very seriously. We take this over the cycle. I mean, we had an exposure to Tricolor. I'm obviously not happy about it. We're looking at what lessons we learned, and, we have looked at it and applied it across our portfolio. But I think credit is one of those things that you take seriously. It doesn't matter whether it's so-called private or credit and who the lender is. It is a full-time specialized job, day in and day out.
But Venkat, is it a systematic risk or is it still isolated? How should we be thinking about investments in private credit when firms like the one you just mentioned go bankrupt?
So in that particular case, there seems to have been fraud. Now, I should say that Barclays had no exposure to First Brands, although we were approached multiple times by them. The thing about fraud is you wonder whether it is one bad actor or it is some effect of circumstances that are stretching the company's finances and making them take risks that they otherwise should or would not do. That's the kind of thing we look for. And that's what I think investors should be looking for over the next, months and quarters.
Venkat, good morning. It's Anna. Sticking with this theme and channeling in some of the thoughts that we got from Andrew Bailey at the Bank of England just yesterday, he and his team say that they're worried that the market is slicing and dicing loan structures like it's pre-GFC, pre-financial crisis. Do you see similarities?
Look, I think securitization technology has been with us for decades. Obviously, the governor and the central bank have a view of, where and how much. And they're talking about a broader review, which is, I think, a good and prudent thing for any central bank to do.
And they talk about alarm bells ringing. It doesn't sound like you're hearing alarm bells, Venkat.
Look, as I said, we pay attention to credit with what we hope is the same amount of dedication all through the cycle. And when you do that, you try to be very disciplined about it.
OK, but how easy is it to be disciplined at the moment, CS? You talk about the fact that Barclays is delivering on that, but this is an industry-wide issue, and we've learnt in the past that there can be problems in strange parts of markets that are hard to determine, and that they can have significant ripple effects into more mainstream banking. Are you being extra diligent right now? We've had years in which liquidity has been easy. We've had years in which underwriting standards have come down. Are you paying more attention? Are you looking at what you're doing more carefully now as we come to the end of this process? How much due diligence are you doing?
So we do a lot of due diligence at all points in the cycle. And I think I would separate two things. Every time you make a lending decision and you monitor those loans, whether it's in a good time in a cycle or a bad time in a cycle, assuming you knew it, you would always apply similar standards. So I think the important thing is to maintain standards through a cycle. And then if there are periods when you're worried more, then you may increase the frequency of your diligence and start looking at signs that you might otherwise have thought were normal. And so, as I said, what you're looking for at this point is our business model stretched and, what are the quality of financial controls in companies and the independence of financial controls. These are the things you worry about all the time and you pay extra attention to in periods of heightened concern, let's say.
Venkat, I feel like every time we have you on the program, we always have to ask you about the IPO market in London. I'll do it again this time, but perhaps with a little bit of a twist, connecting it to the private credit space. We're seeing deal making, we're seeing M&A activity start to pick up in the States. We're not seeing that same enthusiasm on this side of the pond, but we are seeing more mobilization when it comes to private credit because it feels like the IPO route isn't one that's available to everyone. Does that make Europe more vulnerable to a risk in the private space than the public one?
Well, I think the amount of private credit is, of course, much greater in the United States because it's a more advanced industry and developed there. But I want to sort of not talk about private versus public. Credit is credit is credit. I think as far as the IPO market goes, we on this desk behind us took part in an IPO yesterday of a UK bank, Shawbrook. I think you're seeing some signs. It's obviously not as strong as it is in the US. And I do think in Europe, as in the UK, and in fact the governor mentioned this yesterday in the House of Lords, there has to be a continued growth in the equity risk culture of the country. And hopefully with that, you'll see more IPOs.
Venkat, thank you very much. Thank you for joining us. The Barclays CEO, CS Venkatakrishnan, with us to talk about the numbers and the credit market. Really interested to get his take on things we've heard from the US banking sector and indeed from the Bank of England governor, his concerns around AI, of course, and certainly yesterday talking about credit markets. Coming up, we'll stick with the earnings stories. While Akzo Nobel meets most of the third quarter estimates, paints and coatings are down on the year. We will talk about the details of doing business right now, doing global business, as they do at Akzo Nobel in the tariff environment. That conversation is next. This is Bloomberg.
Wednesday the 22nd, 30 minutes to the start of the opening trade here in Europe. Got a lot of corporates on deck this morning we need to focus on. European equities, certainly the futures picture negative this morning, but it's interesting, S&P futures are a little up, not by much, but holding their ground right now. Gold futures are a tick higher, but it's not as if we're buying the dip in sort of big fashion this morning. The market's kind of drifting sideways. We're just north of 4,000. Do we get more buying coming in a little bit later on to carry on the momentum we've seen? We're going to wait and watch. What does the bond market look like?
Yeah, well, just the fact that we're talking about a 1% move in gold and that is drifting sideways tells you everything about this market. In the bond market, we're looking at a 10-year over in the States at 395. Not much action on this side of the pond. I think I'll leave it at that, and I think that kind of sums it up.
There we go. Moving on. Let's get back to the earnings stories, because then we do have some news. Akzo Nobel's third quarter adjusted EBITDA and the revenue numbers seem to come in line with estimates, and the company has left its full-year guidance unchanged. But there's a net loss to talk about in the third quarter and a provision related to a court case. So let's bring in the Akzo Nobel CEO, Grégoire Poux-Guillaume, who's with us this morning. Grégoire, very nice to speak to you this morning. Thank you so much for joining us. So just tell us a bit. What can you tell us about the underlying business? Because I look here at this third quarter net loss, 194 million. I add back in the provision that of course, is for a court case. And that still doesn't get me quite to where the estimates for the net profit level were. So what can you tell us about the underlying performance of the business?
Yeah, for Q3, we are at consensus in terms of EBITDA. We delivered 385, which was the consensus. The provision for the court case is non-op, non-cash. It's for a project from 10 years ago on which we're adjusting our risk coverage. But what's important is the underlying business, and our markets are soft. There's not a whole lot of growth currently in paints and coatings. There are pockets like marine protective, where the big backlogs are aerospace. But if you look at the global market, the local businesses are doing quite well, essentially our decorative paints businesses. And the global businesses, the B2B businesses, are mostly suffering. And then there's a geographical imbalance where we are performing well in China, but we're suffering on a depressed market in the US.
OK, so suffering in the US, well in China, it's the global part that suffers and the local part does OK. So some really interesting dynamics that tie into the big global themes. No doubt we'll get to some of those in just a moment, Greg. Can I just ask about the court case, though? This 300 million euro provision, there were provisions and there were provisions. How much certainty do you have around that kind of number? Could it be a lot higher, a lot lower? What's the context?
It's an ongoing court case. It's from a project from 2013, 2015. The proceedings started in 2021. The court proceedings are still ongoing. So it is really just our reevaluating our risk coverage and making sure that we're up to date on our disclosures. There's not a whole lot more I can say because it's an ongoing court case.
Gregor, good morning. It's Guy. B2B. What are you hearing back from customers? What are they telling you? What does your supply chain look like? What are your customers telling you? Just in the United States, in Europe, and over in China. Can you just give me a bit of colour on that?
Well, the trade issues that we're seeing currently, the tariffs, don't really have a direct impact on us. We're mostly local for local. We've got 130 plants around the world, so we can work our way around that and make sure we're not exposed to tariffs. But our customers are struggling, and they're struggling because they're trying to figure out where they should be producing and where they should be investing, and that is having an impact on essentially holding back investments, particularly in complicated industries like the auto industry. And that's going to continue until there's clarity. But we're working our way through that, and we're doing it by making sure we are increasingly efficient.
OK, so there's no sort of direct tariff effect, but there's an uncertainty effect that comes from tariffs. Is that the right way of looking at it?
That's exactly the right way to look at it.
So what does that mean in terms of how you see the business progressing from here? Do you see that uncertainty persisting? Do you see a moment of clarity coming? Or is this something we're going to have to live with for the rest of the Trump administration?
Well, there's no signs that the question marks will be lifted anytime soon, but I guess customers are getting used to living with uncertainty, and as they do that, then I think some of the investments will be unlocked. We see that a little bit in the automotive industry, where there's areas that were on hold, like Mexico, that are picking up a little bit. But it is an uncertain world, and customers that are running local for local businesses do a lot better than the customers that have to contend with global flows. It's just a more complicated way of running businesses, and as much as it doesn't impact us directly, it does impact our customers, and therefore it weighs on our ability to grow.
Grégoire, speaking of that kind of complicated way of navigating this geopolitical environment, let's talk a little bit about the currency picture, something you bring up in the earnings. On Wall Street, there's a big question right now of whether or not we see some sort of swing back in the dollar, or we see sustained weakness in the dollar relative to currencies around the world. How are you thinking about the FX picture? How are your team modeling maybe just the next 12 months when it comes to that currency strategy?
Well, given the Akzo Nobel model, we don't have a transactional impact. We have a translation impact. What I mean is essentially we're naturally hedged because we have 130 factories around the world to generate 10 billion in revenue, which tells you that we have a strong local presence in most countries. That allows us to have a good match between our revenue and our costs. Where you see the impact for Akzo is really the translation. We report in euros, and the euro's been strong versus our basket of currencies. And for us, from a translation impact, it has a 30 million euro impact per quarter, pretty much, which essentially forces us to update our view on currencies and on the basket on a regular basis, but it's not having an impact on the profitability. It's really just a translation impact.
Understood. Grégoire, I want to ask you about a new activist investor in your company. Cevian Capital recently disclosing a stake. Have you had conversations with them? Are they supportive of your strategy moving forward?
They are. We've had a lot of conversations with them. They're a very deliberate and thoughtful investor. They've been talking to us for 2 years. I think they took part in every single roadshow we did in the last 2 years, and therefore it really wasn't a surprise when they started buying. They crossed the 3% threshold at the end of August. They crossed the 5% threshold and made a disclosure last week. And right now they're a bit more distant because they're accumulating. If they continue buying at the rate they're currently buying, they should be around 10% at the end of the year. I have no indication that this is where they want to go, but if you take their average investment historically, it's about €1 billion per company, and that get you to something around 10% for us. So, we'll have a significant activist under the Christmas tree.
Yes, absolutely. They might load up today if the stock is going to drop a little at the start of trade, which is what we're seeing here, Greg. I mean, how does that sit with you, having an activist? What exactly are they asking you to do?
Well, they're supportive of our strategy. We're streamlining the business. We're optimizing the portfolio and refocusing on areas where we have the best chances of being a market leader, and they've been very clear publicly that they're supportive of this. And at the end of the day, any investor that is supportive of our strategy and that is focused on value creation, I'm happy to have on board.
Sounds like the dream. Maybe you'll just get that for Christmas. Grégoire Poux-Guillaume, CEO of Akzo Nobel, we thank you so much for your time this morning. Keeping, of course, one eye on the earnings picture here in Europe. Let's talk about the earnings picture on the other side of the Atlantic. Bloomberg's Valerie Teitel is all over. She joins us now. Val, I'm tempted to ask you what you're watching on Netflix, but tell us about those numbers instead.
Well, everyone is downloading K-pop Demon Hunters. It was the most popular series from Netflix in the previous quarter, and it made some new records for downloading. But despite that, Netflix shares did sink in after hours, down 6.5%. This was all due to a $600 million charge they had to pay the Brazilian authorities to settle a tax case. The executives were quick to say afterwards that this is a one-time charge. It is not going to have a material impact on quarters to come. And despite this charge, that they did see a solid set of results underneath the hood. But nonetheless, 400 million shy on operating profit estimates, and that's what led the stock to drop. Now, the executives also wanted to address some shareholder concerns, especially when it comes to AI-generated videos. Kriti, they were quick to say that they think it's more user-generated content that's going to be affected by AI videos, not Netflix. The likes of user-generated content on TikTok and Instagram, for example, rather than the streaming platform. We also had disappointing disappointing earnings out from Texas Instruments, down 8.6% after hours, really showing that this turnaround in analog chips is really not coming to fruition. It's been a 2-year drawdown, at least for the analog chip demand, on the back of weak demand from China, weak demand from autos. So Texas Instruments, a disappointing forecast for a second quarter in a row, and shares looked lower in after hours, down 8.6%. So it was not exactly the most exciting after hours earnings announcements.
Yeah, so a couple of downside moves then in terms of corporates over in the States. Valerie, something else that was moving lower yesterday is gold. It seems to have stabilized a little right now, trying to find some upside. What stood out to you?
Look, I mean, it's not very often we see gold dropping over 5% in a session. It hasn't happened in 5 years. But, Anna, we were ripe for a turnaround. Gold has gone up 30%, nearly in a straight line since the end of August. Now, questions just remain whether this is going to have an impact on other asset classes, and perhaps was that all of the gas that needed to be taken out of the rally. It didn't necessarily impact stocks overall yesterday. The S&P 500 essentially closing flat yesterday. But if you look under the hood, momentum plays were hurt on the back of this drawdown in gold, which might get investors thinking they might want to take some chips off of these momentum trades that have done surprisingly well ahead of that U.S. CPI report on Friday.
Yeah, thank you, Valerie. Valerie Teitel with the latest on some of the themes around the markets over the last 24 hours. I mean, yeah, that move in gold didn't seem to be driven by much of the geopolitical news flow. It seems to be very foggy as to what we can expect from a Xi-Trump meeting, whether we will see a Putin-Trump meeting. So it wasn't as if there was a sort of clear clue on geopolitics that would be moving gold around.
No, a lot of momentum recently. Maybe that's starting to fade. Coming up, a warning from the Bank of England.
We certainly are beginning to see, for instance, what used to be called sort of slicing and dicing and tranching of loan structures, for instance, going on. And if you're involved before the financial crisis or during it, alarm bells start going off at that point.
Are investors as worried as the Bank of England? This morning, equity futures up in the States, mixed in Europe. Gold is holding above 4,000. We're going to bring you the stocks to watch that you need to be looking at into the open next. This is Bloomberg.
Welcome back to the opening trade. Just under 15 minutes until we get the start of equities trading. But there is a story we have not covered yet, and it isn't the tech universe. This isn't the private space, but I think it's a really interesting one. It kind of gives us a clue of where we are when it comes to the AI trade, the cloud trade, arguably the tech trade broadly. A big story here that Anthropic and Google are in talks for a multi-billion-dollar cloud deal. I just want to take a step back and explain what the landscape actually looks like, starting with the biggest cloud service providers. I know AI is the hottest thing to talk about right now when it comes to technology space, but don't forget that the cloud service ramp up is still in focus. We're still about 40 to 50% in terms of penetration in the market. That's why so many folks like Google, for example, are still pushing that agenda. And this is crucial because when it comes to the breakdown, there's really two major players. It's AWS, which is kind of dominating 30% of the market cap, followed by Microsoft. That's that purple right there, about 20%. Third in line is Google Cloud. They are trying to gain that market share. It had about 13% right now. The rest is a multitude of players from the United States and China. Let's talk about how this affects one AI startup in particular, and that, of course, is Anthropic. This is known for being the big AI bet from AWS, but don't forget that Google is also, or I should say Alphabet, is also a major investor and a major backer, second to Amazon's backing in Anthropic, whose large language models are basically the key competitor to OpenAI's ChatGPT models. This is crucial in their valuation funding rounds. They're getting backing from a lot of venture capital, including from the Middle East, to the point that the momentum you're seeing around Anthropic beats even that of OpenAI, despite OpenAI having a higher valuation. And just look at these numbers. In March of 2025, earlier this year, we're looking at just shy of $62 billion in valuation. That has almost tripled just a couple of months later. That speaks to really not only the enthusiasm behind the AI space, but the enthusiasm around some of these players that aren't even public yet.
Yeah, private market valuations around tech, really interesting topic of conversation, of course. Let's widen the lens, Kriti, talk about the markets in 3 minutes. Bloomberg Markets Live. Skylar Montgomery-Koenig joins us here on set this morning. Skylar, very nice to have you with us. Let's start by talking about some of the data we've had out of the UK today. We've had the inflation print, which has not come in as hot as had been feared, and traders are adding to Bank of England easing bets as a result. Is the sense here that if inflation isn't quite as much of a problem as we thought it was, there are fewer barriers to easing for the BOE?
Yeah, I mean, I think that's absolutely it, because you have a weakening labor market, growth isn't as strong, and so inflation, what's really holding you back. And I think what's actually super interesting about the inflation data this morning is that it was to be expected you'd get a downside surprise. It's this emerging seasonal trend that we've seen where, because you have these big price resets in April, so stuff like your phone bill rises by RPI, it's the start of the fiscal year in the UK, so you have increases in taxes, et cetera, that come through at that point, as well as a price energy cap increase. You get this distortion in the data, and it wasn't an issue before COVID because inflation was low, but now when you have higher inflation, it's adding to that persistence. And so you see this trend where activity as well as inflation surprises to the upside in the first half of the year in the UK, and then into the end of the year in the fourth quarter, it surprises to the downside. So you can expect that to continue, and it likely means that a Bank of England cut this year is very much in play, and that should be the benefit of gilts, especially at the front end.
Okay. We're getting some data out of the UK. We're not getting any data much out of the United States. The data we have is distorted by a number of different factors. Are we flying blind here? How can we get a handle on what is really happening?
Yeah, I mean, there are data points here and there that we can look at, and so that's why last week we had such a big focus on bank earnings, because that tells you about the consumer and businesses. But it's something that I'm very much worried about with regards to the U.S. in terms of giving a false signal to the Fed. So we've had the reference week now for the October employment report that happened during the shutdown. And so it's likely to be artificially weak. And the worry is that the Fed reads that it's one of two employment reports we get before the December meeting, which I think is more in play than the October meeting. And we don't know if we'll get the November report in time in terms of will it happen when the shutdown is occurring still, or will it not? And so it could make the economy look artificially weak, force the Fed to overease, and then you might have an overheating economy into 2026.
Are those the jitters that are fueling the gold drop? I mean, we're trying to do a little bit of detective work here in terms of what is actually, may they be kind of underpinning that move. What do you think it is?
Yeah, I mean, I think it's just kind of a frothy market, right? You've had such a large move in such a short period of time. If you think about it as a reallocation away from dollar reserves or anything else, the market sizes are very different, right? The U.S. dollar market is much larger than the gold market, which is larger than the silver market. And so as you get these kind of jitters and you're just saying, oh, it's a really frothy, elevated level, you don't necessarily need a big news or anything to have that feed out in quite an aggressive way. What I will say is, in the long term, I think you're still likely to get more gold upside from here. It's a structural shift, right? You're having central banks that are realizing that they need to have reserves that are comparable to the average across market. So China, for example, it's at something like 5 or 6% of reserves in gold, and they need to get up to 20%. So that's going to be a bid that continues, especially if we are worried about kind of the risks that are ongoing, like politics, et cetera.
It feels like the laundry list of worries continues, which perhaps could feed that bull case. Bloomberg M Live Skylar Montgomery-Koenig joining us this morning. You get more up-to-date analysis from her and the team. MLIV Go is the function on your terminal. Let's go from the macro to the micro. Get our stocks to watch with Chloe Melly. Chloe.
Good morning, Kriti. Let's start with beer this morning. So Heineken lowered its outlook to the lower end of the range and reported falling sales and volumes across some of its key markets in the Americas and Europe. So at first glance, that looks like quite a negative update. But analysts are actually saying that this could be well received because it allows the company to now focus on their strategy going forward. And this was actually a little bit better than expected. So we could see that relief in the shares this morning, a much needed relief for Heineken. As we can see, it has been the worst performer in a beer sector that's been struggling kind of across the board with AB InBev and Carlsberg. So we'll see if Heineken manages to kind of shake off that hangover this morning. Moving on to L'Oreal, which reported disappointing sales this quarter due to weakness in the US, and that is despite a pickup of momentum in China. So we could see a reversal of some of those quite impressive gains that we've seen in that stock recently. The CEO also did warn that despite the signs of improvements in China, a good quarter does not make a trend. So essentially saying to the market market to not get too excited. So if we get that cautious commentary in addition to those disappointing sales, we could see that pressure on the shares this morning for L'Oreal. And finally, Barclays upgraded its guidance this morning and said it was going to move to a quarterly share buyback with the announcement of a £500 million share buyback today. However, it did also book an additional £235 million provision related to that Mona Finance redress program. So that could potentially be a negative, and we could see we'll see if the buyback and the guidance manages to overshadow this Mona Finance provision and allows Barclays to continue on this really positive trajectory that it's been on recently.
Chloe, thank you. Our equities reporter, Chloe Melly, thank you for that. As Chloe was spoiled for choice when it comes to corporates to talk about this morning because there were so many. So I'll add in another one, Adidas, upgrading their profits. The new CEO came in from Puma, of course, a lot of expectation that he was going to be able to increase the profitability of the business. And so far, that recovery, the strength seems to be focused around the Samba trainers, I understand. And so a lot of focus on whether he can deliver the same thing in running shoes and in basketball shoes. He seems confident of his ability to succeed. So that's just one of the other companies we'll watch.
Aren't you the Samba expert?
Oh, yeah, totally.
Yeah.
Completely, without a shadow of a doubt.
Footwear, not dance moves.
And both, to be honest. I can deliver on both fronts.
One whilst wearing the other.
That's how we get our viewership up, I think.
There we go.
Take one for the team.
Should we talk about gold stocks? They were one of the worst performers yesterday, or basic resources more broadly was. It was all silver and gold retreat. Could we see a bit of a bounce there this morning? That could be something we'll watch for.
Luxury stocks are going to be interesting. So we've got numbers out from Hermes. Looks like the US is continuing to spend a lot of money. Is that related to crypto and various other things? I don't know. Crypto's having a bumpy time recently. Does that translate back into maybe some of the luxury names? I think the story around kind of what is happening with the more defensive names is going to be interesting. Like Akzo this morning looks like it's going to take a fairly significant hit on the back of what it's seeing, particularly in the United States and the court case that you were highlighting, Anna. But the list of stocks that I have this morning is usually kind of 10, 15. This morning it's significantly longer. So you're going to see some choppiness maybe around the opening trade. That is what we're going to be watching next. Futures mixed in Europe. The FTSE looks like it's going to outperform. That's next. This is Bloomberg. Wednesday morning, let's talk about Tuesday and figure out exactly what happened yesterday. Throughout this year, if you look at FTW on your Bloomberg factors to watch, you'll see the momentum has been a huge driver of the stock story. Yesterday, it wasn't. Are we starting to see cracks appearing in that momentum trade? Well, certainly gold was a factor into the thinking around all of that and certainly played a part in terms of the European session. Names like Fresnillo were really down hard yesterday. Europe tried to rally into the close yesterday, which is significant, and we went out kind of here. To be honest, European markets kind of left it mid-session stateside, and we kind of drifted sideways from there. Tech didn't have a particularly good afternoon over in the United States, Kriti.
It didn't, but I think what's interesting is the way that's feeding into the European markets, because there's a couple of factors here. I'll start with the underperformance, Anna, that we're seeing in Euro Stoxx 50 futures, down about 0.3%. A completely different story when you look at the UK market. Some of that might be the eco conversation here. Some of that might be the CPI data that we got, not to mention the miners read-through if we're talking about some sort of gold rebound. The CAC 40, though, that luxury story seems to be weighing it down. It is your underperformer of the morning, down about 0.5%.
And Kriti, that is certainly one of the sectors we'll keep an eye on. So in terms of luxury names, we're certainly watching Hermes. That could be something that provides some upside, perhaps, as the numbers came in better than had been anticipated. Some decent performance in the Asia region and in the United States. US shoppers splurging on pricey Birkins is the headline of our story. So that's luxury. We'll watch that for Hermes, but also we're looking ahead to some numbers out of some of the others within that space. Banks in focus after we spoke to CS Venkatakrishnan about credit, largely over at, he's at Barclays, of course. UniCredit also in focus as a result of their numbers. And Adidas, we'll keep an eye on this one. They've upgraded their guidance. It didn't push the ADRs up that much yesterday, but we'll see what it does to the main listing in Germany, Guy.
I'll fold in the mining stocks. You're going to want to watch out for those. They got hit hard yesterday. Are they going to bounce back today? That could be a factor for the FTSE 100. Let's take a look at the opening numbers to get an idea of what is happening here. FTSE's out. We're up by 0.1%. We're expecting maybe 0.4%. We're expecting continental markets to be a little bit weaker. There's a lot to fold in terms of the story there. Luxury is going to be one of the main elements of the narrative, certainly here in Europe, but banks are interesting. Watch out for Hermes this morning. See how L'Oreal does. We watched its ADRs overnight, having a fairly difficult time. But the FTSE 100 is definitely outperforming, and we'll come on to the details of that in a moment. The CAC is, though, underperforming. So you're getting some divergence in Europe, which tells you maybe about some of the underlying divergence you're getting at a stock and a sector level. So let's dig into the details of what we're getting there, Kriti.
Absolutely. I mean, when you're talking about some of these movers here, I mean, it looks like they're already seeing a little bit of volatility. I'm waiting for some of these firms to open here. But right off the bat, you are seeing technology be the laggard. Your biggest index contributor to the downside is the likes of ASML. It's SAP. I'm even seeing Schneider Electric take a little bit of a hit here. So that seems to be what's dragging down the market, perhaps a read through from what we saw over in the States yesterday as well. When you look at basic resources, though, that's where you're seeing the gainers. It's Rio Tinto. It's I'm seeing a little bit of oil companies here as well. So Glencore even having a good day. So, Anna, that mining theme very much in focus.
Yeah, absolutely. It just took a little bit of a stabilisation in the gold price, it seems, and that's been enough to turn a little bit of that performance in basic resources around. We're up by 1.3% on the sector, but it was down by substantial amounts yesterday with the real short-term, at least, collapse of the gold price. Certainly, it's still bouncing back this morning. 4,153 is where we trade there. But yes, the luxury space is in focus in Paris, and that is weighing on the French market considerably. So Hermes down by 4.4%. That's dragging some of the other luxury names down as well. Richemont, Kering, Christian Dior, all weaker. L'Oreal down by more than 5% in the consumer space. And so that does explain some of the underperformance that we're seeing over on the CAC. We haven't actually got an opening price on the DAX. I can't see one just yet. So we're certainly looking to see what we have there from that market, keeping an eye on Adidas. And that seems to not be open just yet. So we'll watch that one with interest.
Just trying to see what Fresnillo's doing and see kind of how the gold...
Also not open.
Not open yet. So that tells you a lot about how the market's trying to deal with what was a 12% drop yesterday. We'll see how it performs when it comes back today. Stabilisation in the gold price. But maybe a hint that we're going to see more volatility, which means just kind of judging these gold mining stocks just a little bit more interesting in terms of how you're going to think about the valuation story there. There's obviously been a kind of derivative play into the gold miners as a result of the price movements that we're seeing in gold. If we get some choppiness, are we going to continue to see single stock choppiness increasing and single stock volatility increasing around some of these mining names as well? We'll wait for an opening price.
And I wonder if we would have, Kriti, on another day, talked more about that Texas Instruments story, because that seems to be weighing on some of the tech names here. What we lack in AI-listed stories, don't make up for, but we certainly throw in the exposure to chip stocks. So Infineon and ST Micro, both down by more than 2.5%. And I wonder if that's read across from the TI story.
We should talk and just mention a few other banking names as well, because it's a tale of two stories when it comes to some of the banking names. Barclays is up by 2.5%. DNB, which also we didn't hit it earlier, but it did report the earnings. They're down almost 4%, and it's actually one of your biggest weights on the Stock 600.
But is Barclays up today because it's just brought forward its buyback? And to your point, this has been the driver of the banking sector. So you latch onto that as a narrative. The call's been going on, and there's some clear kind of areas of focus this morning. What's happening in equities? What's happening with the credit trade? There are areas of interest within this bank, but kind of if you just deliver that, going to buy back a whole load of stock, we're good.
And we saw this last week, right, with the failed BBVA Sabadell did. The market rewarded the buybacks despite some of the news. Let's get a little bit more analysis on this very topic. Maria Weitman, State Street's head of equity research, joins the program this morning. Maria, I was going to ask you about defense, but now I have to ask you about the banks. Is buybacks the most lucrative part of buying banks right now?
Yeah, no, good morning. And I think that you're exactly right. I mean, what we're seeing with banks is that over the last 2-3 years, they're actually making a lot of money. But where are they making money? They're making money in trading, they're making money in asset management, in fee revenues, which, kind of non-repeatable business. Or it's hard to make a case that traders will always make money. So banks make money in those businesses, they pay them back. Whereas the banks are not making money, and where is my kind of key fundamental concern for banks is that they're not making money in core lending activity. That's a big concern and kind of negative read across to the rest of the economy. But as far as banks are concerned, they're profitable, they're stable, they have money, they don't see huge lending demand, and they give money back to shareholders. So exactly the right thing for them to do, and shareholders rewarding them. Is it a great long-term story? I question, but tactically, that's exactly what's happening.
Well, let's talk about the long-term story then and come back to the defense story. We go back and forth on this show talking about where defense in this region should play in the portfolio. Maria, is defense a defensive trade?
I mean, for us, defense, so what we see in terms of defense is that institutional investors have built huge position in those stocks already. So that's a really crowded trade. Valuations have come up. So, I mean, to us, that's potentially a trade that kind of can potentially disappoint because people are already in it. And, okay, what's the marginal catalyst? Can we invest more? And we're seeing, like, the story is chipping kind of on the side with kind of fiscal concerns, with back and forth with U.S. negotiations. So that's a difficult story for us because investors are already in it. So we actually think that risk rewards is potentially on the downside.
Good morning to you, Maria. Really nice to see you. Can I ask you about consumer-facing companies? It's the worst performing sector in Europe this morning, consumer products and services. And there's the luxury angle there, but there's also the more mainstream consumer businesses. I'm thinking here about the likes of L'Oreal and Adidas. Both of those companies down. L'Oreal down by more than 6% this morning. What do you make of the performance of this sector? What are you watching as we go through the earnings season when it comes to these consumer-facing companies?
So I have kind of two things to watch. I mean, I'm watching investor positioning, and investors are really underweight. Investors really kind of voted with the feet on those names. As I mean, those companies have been struggling with margins, struggling with profitability. Investors left the sector, so there are no positions. Investors really underweight that. And then we're looking at the second thing to watch is we're looking at is profitability about to improve, and again, huge question marks. And I thought LVMH story was really interesting, is that they exceeded expectations, that they've done a bit better, but investors are still quite hesitant into buying into the sector, mostly because of the kind of the cyclical headwinds are still there. I mean, Chinese consumer is still not coming back as much as we'd like to, and I mean, big European companies are still hamstrung by strong currency, so that's a driver as well. But for now, we don't see kind of money coming back into the sector.
Can I ask you about the mining space? We clearly focus a lot on the gold price at the moment because of the incredible gains we saw earlier this year, or for much of this year, in gold, in silver, and some of the others as well. Yesterday, things looked a little different. Maria, how are you watching gold and what it tells you about the wider market? Are you watching the linkages between gold and equities, or potential bubbles in AI stocks, or in the credit market? How does gold fit into the wider narrative for you?
Yeah, no, that's a super interesting question. I mean, the way we think about U.S. economy or overall like equity market is very much kind of yes, but. So overall, U.S. economy is strong, but the strength is concentrated in a kind of larger companies, higher income consumer. Yes, U.S. corporate earnings are strong, but it's driven by tech sector. So what we see in terms of performance, what is leading, like, I don't know, in the last 6 months, it's your Max 7 and gold. So that's really unusual kind of combination of asset performance. So it's, I mean, the way we think about gold is kind of another manifestation of that kind of hesitation about equity market, but you have the AI story. So, I mean, for us, the way we think about equities is very much kind of still very concentrated bet on tech. That's performing very well. We struggle to see broadening, and this idea that people, instead of going into defensive stocks, they're going into gold. And I mean, we have big concerns about defensive stocks in US, globally, actually, mostly because of the kind of underlying profitability issues. So that makes sense to us. So you do tech and gold. That seems to be the trade.
Can I just pick up on those relationships and the correlations we're seeing, Maria? One of the Goldman Sachs's macro traders yesterday described asset class correlations as, quote, weird. Do you think they're weird?
Yeah, no, we actually do have an indicator for that. So we look at unusualness of those correlations, and exactly to that point, so we can measure it being weird. And what historically it meant is that when those, what we call correlation surprise, is high, it tends to precede spikes in volatility. So that's something that definitely worth watching. So yes, weird correlations are important indicator.
Do you think we're in a different market, though? So that was the other point that people are trying to discuss at the moment and trying to work out whether or not actually the kind of the correlation relationships that we've had previously don't work anymore, and as a result of which maybe some of the correlations make sense, maybe are stickier than we thought they were. The relationships that we thought previously would work aren't. Do you think we're in that kind of environment? I.e., does the market stay weird for longer?
Yeah, no, I think that's definitely true. And I mean, it kind of goes back to what I was saying earlier. So you have this kind of, I don't know, economics, earnings, kind of uncertainty and slowdown. And overall economy is not doing amazingly well. It's kind of bumping along. And then you have this fantastic tech trade and AI excitement, and those stocks do fantastically well. But do they reflect underlying economy? So normally you would say, oh, stock's doing well. It must be indications that like, growth is there and economy is doing well. That's not true anymore. I mean, AI is kind of a separate beast. It's huge. It's pulling the market higher, but it's not a good read across to the rest of the economy. And with the rest of the economy, we do have those hesitations. What it means is that potentially Fed is cutting rates and kind of inflating that bubble. That kind of big trend in AI, but it's not an indication of economy, and I think that's what's kind of this weird correlations kind of mean for us.
Weird correlations. Final quick question, therefore, on kind of pulling this all together. Yesterday, best performing factor in the market, share buybacks. Worst performing factor yesterday, momentum. Momentum's been a big factor this year in terms of how you've thought about the portfolio. How big a risk is there that starts to unwind now, that momentum trade, and gold you could factor into this as well, is a part of it? What happens when momentum kind of hits something else? Let's talk physics here. Does momentum slowly peter to a halt, or does momentum end as an opposite and equal force kind of stops it?
Yeah, I mean, I'll probably hesitate a little bit in saying that kind of momentum trade is finished. I mean, it's been a very long trade, very profitable for a lot of people. Okay, we're having bumps on the way as kind of normal. But I mean, why momentum was so strong? I mean, to me, momentum trade was so strong because there's very little alternative to the tech trade. The minute we see that alternative coming up, then yes, we rotate and we go somewhere else. For now, we really don't see it. And I mean, your point on buyback. So yes, banks are profitable, banks are making money, but they're not making money in the right way. Investors are not rotating into there. They're just saying thank you very much for the buyback. So that's, to me, the key driver of momentum, is that the kind of momentum and earnings. Once we see earnings broadening, yes, the whole thing unravels. But I don't think we're there yet.
I'm really happy that you have a weird indicator. I think we should all have one of those. Maria, great to catch up. Thank you for joining us this morning. Maria Weidmana, State Street Global Markets Head of Equity Research. Thank you. What's the Core 6 looking like this morning? Let's take a look. There's some interesting trades out there that are worth paying attention to. Look at that. Rheinmetall is the only stock that is now higher on the Core 6. Defence stocks are on the front foot. There's a lot of volatility in single stock names. Pharma is down. Fresnillo has opened up this morning, so the mining stocks are on the front foot this morning. But on a two-day basis, you need to look at two-day charts today. Today is definitely a day for two-day charts. Let's figure out what is happening in more detail with Chloe Melee.
Good morning, Guy. L'Oreal shares are taking quite the beating this morning. We're down 7.6% for L'Oreal after reported disappointing sales for this quarter. And that was due primarily to weakness in the US, despite actually quite good momentum in China. And the CEO also mentioned that despite that really good quarter in China, that this was not yet a trend. So there's quite cautious commentary. And all of that is really driving down the shares for L'Oreal this morning. Moving on to defense, which is doing quite well after Trump said that he did not want to have a wasted meeting with Putin, which means that perhaps that summit that is planned, the second summit, might not happen. And that pushes back the prospect of ceasefire in Ukraine. And that is driving shares across that defense sector this morning. We've got Ren Group in particular, which is up almost 4% this morning. Moving on to Barclays, which is also in the green after reporting earnings this morning. It did book an additional provision related to motor finance, but it also upgraded its guidance. It launched a new £500 million buyback, and the investment banking revenue, which is kind of a key division, also reported quite solid numbers. So all of that is driving the shares for Barclays this morning. Moving on to the chip making sector, which is in the red this morning. We've got ST Micro, BE Semi and Infineon all in the red on the back of some read across from Texas Instruments over in the US, which said that the recovery in the industrial and automotive chip sector might take a little bit longer, is slowing down, and those companies that are exposed to those sectors are in reaction to that down. We've got ST Micro in particular almost down 3%. And finally, Akzo Nobel, the paint maker, cut its outlook this morning, and that is driving the shares down 6% for that company.
Chloe, thank you. Chloe Melly from our equities team. We will get to some of the gold mining story in just a moment. Let's talk about what's going on with ITV in the broadcasting space. This stock is down by 8% this morning. Liberty Global, which has owned a stake in this business for more than a decade, has basically pulled the plug on it, called time, said we're getting out, selling some of its stake and selling it at a discount, and that is what has dropped the price this morning. I mean, this has been talked about as a takeover target for so long, and it strikes me as really interesting. On the day after the Netflix management were asked, do you want to buy, old school media within the United States? And they say, no, we're not interested. Yeah. And then I'm not suggesting they are linked, but the thought was linked itself in my head. Liberty Global, the day after, says we're getting out of ITV.
I think as television anchors, our ears perk up every time we get that kind of news.
ITV has big production assets, so it's interesting considering kind of how much money that Netflix spends on production. It'd be interesting to see whether these assets go cheap. If you look at the MRR function on a 2-day basis, stocks that are moving, kind of ITV is the worst performing stock over 2 days. On the stock 600, it's down by 8.31%.
And it is a day for 2-day charts.
Precisely. Fresnillo is the second worst performer, so bouncing back this morning. So the gold miners are coming back, but they're still down heavily on a 2-day basis as a result of the move that we saw yesterday in gold. But there's plenty of other names that we've been talking about this morning that are on that list as well, like L'Oreal down hard over 2 days, Akzo Nobel down hard over 2 days as well. So the kind of the earnings story is mixing with the volatility we've seen in the metals market quite in an interesting way this morning.
Yeah, it's really pushing the entire index up. When you look at the FTSE 100, it's your only index in the green by a massive margin, higher by 0.7%. I mean, there's the gap between that and what you're seeing in, say, France, for example, down about 0.7%. It's almost a 1% difference.
Yeah, absolutely. Speaking to their very different sector specialisms, perhaps. Coming up on the programme, we check back in on the Barclays share price after the bank announced a £500 million share buyback. They are increasing the cadence of those buybacks. We discussed that with Maria Weitmeier. It is sending the stock up this morning. We'll talk about that next. This is Bloomberg.
We had an exposure to Tricolor. I'm obviously not happy about it. Barclays had no exposure to First Brands, although we were approached multiple times by them. The thing about fraud is you wonder whether it is one bad actor or it is some effect of circumstances that are stretching the company's finances and making them take risks that they otherwise should or would not do. That's the kind of thing we look for, and that's what I think investors should be looking for over the next, months and quarters.
C.S. Venkatakrishnan, CEO of Barclays, talking to this show a little bit earlier on, talking about what's happening in the credit space. There's lots of strands in the Barclays numbers this morning that are kind of worth pulling on and trying to figure out exactly what is happening here. To do that, we are joined by Tom Metcalf, who leads our EMEA finance coverage. It kind of feels like there's a lot of things kind of that Venkat's going to be worried about over here, and then there's the buyback over here. And the investors are like, yeah, we're going to look at the buyback.
Yeah, I think that's exactly right. And, you can see a 3% jump in the shares. That's helped by the buyback. It was also interesting to Venkat kind of reiterate that we're bringing forward our financial targets for 2026, 2028. That's coming a year ahead. So that all speaks to this sort of sense that the restructuring is on track.
Yep.
And obviously from his interview with you guys, he was very positive in terms of broadly, I'm very happy. But of course, there are quite a number of things this quarter. Motor finance, Tricolor, equities being very disappointing, which, as you say, an individual basis, you're like, oh, that looks a little bit more downbeat than we expected.
OK, so that's Barclays. We've spent a bit of time at Barclays this morning. UniCredit, we also had numbers out from UniCredit this morning. What stood out there?
So I look at those results and they look really good. And then, of course, the shares fall. So that's how much I know.
Our daily world.
Yeah, no, I think it looks like a very straightforward set of numbers. Orchel, again, just kind of operating seemingly that bank, really to its maximum in terms of distributions, etc., and squeaking everything he can out of it. And I think, to be honest, just the expectations there in the market were already so high. Shares are up so much that, basically anything other than a beat, which is what they did, would probably have disappointed. So I suspect the shares will be relatively flat today.
All right, Tom Metcalf, who, of course, leads our our European, I should say, global finance coverage. He does a little bit of everything. We thank you so much walking us through the banking story. Let's talk about another sector that we've got our eye firmly on. That, of course, is luxury. It is moving the French market in a very big way. We should talk about Hermes. Shares down about 4.3% and falling as we speak. Sales have grown as a Birkin bag maker continues to attract wealthy shoppers, especially in the United States. Third quarter revenue at constant exchange rates rose almost 10%. Andrea Felsted from our Bloomberg Opinion team is all over this. What's your take on that 10%?
It wasn't a big beat. That's probably why the shares are reacting. The thing about Hermes is it does very well when things are not great. You know, it's got long wait lists for its iconic bags.
Yeah.
If somebody doesn't want the bag, just goes to the next person on the list. That's great when things are not going so well. When things are going well, it means that it can't outperform as much as the others because it does have these production constraints. And we are looking for a luxury upturn. So naturally, investors are looking to more of the names that can outperform when times are good.
I thought the same thing about Ferrari. Turns out not to be the case. Ferrari's share price has been under a lot of pressure. They have long wait lists. Let's talk a little bit about what is happening with L'Oreal. So there's a lot going on in kind of beauty and fragrances. But L'Oreal had a tough time in the States.
It did. It seems to be underperforming in the US. And, you know, the US... the US is a really bifurcated... I mean, I've been covering retail for 15 years. We've talked about the bifurcated consumer all that time.
K-shaped recoveries and all that stuff.
It seems like... I was out there a couple of weeks ago. It seems like the consumer is more bifurcated than I've ever seen. The top end are doing really well because of the markets, and that wealth effect is real. The bottom end are struggling with food prices, inflation coming back, tariffs.
Yep.
And I think it's the same with cosmetics. The top-end fragrance is performing the run-of-the-mill cosmetics, and for some reason L'Oreal doesn't seem to be outperforming in the States.
Yeah, seem to have spent so much time this week talking and reading about expensive fragrances, which is a first. Let's talk about some of the deals being done in the sector, or perhaps deals that might be done. Other media reporting LVMH exploring the possibility of a sale of half of its stake in Fenty Beauty. And I think of Fenty as something new on the market, but it's 8 years old now, and I don't know, maybe that's a long time in fashion beauty.
I was quite surprised by that report. You know, beauty assets obtain high valuations. You know, we just saw with the Kering Beauty, if you just take what it was earning on its own, it was 11 times sales. You know, the beauty valuations are high. But LVMH doesn't need the money. So why would LVMH want to sell a stake in Fenty, which has been very, very successful? And one thing LVMH likes is control, so you lose a bit of control. I mean, they have been tidying up the portfolio, but I was slightly perplexed by that as to why LVMH would want to give up part of a successful asset.
Well, let's push it forward. Karen reporting after the bell. What do we watch?
It's all going to be what the new CEO, Luca de Meo, says. Does he say anything? He's already really hit the ground running. Already within days of arriving, he had delayed the Valentino deal, the option to take more of Valentino. He struck the beauty deal, been moving very quickly to address that balance sheet. It's what does he say about any other asset sales, about the strategy? And also, how's Gucci doing? Has there been any improvement in the Gucci numbers on the back of the first Demna, the first glimpse of Demna collection, the limited edition collection in stores, and that bonkers film?
OK, we'll talk about that in the break. Andrea, thank you very much. Yes, he must be enjoying the glamour, mustn't he? Coming from cars to luxury, we'll see. Bloomberg Opinions, Andrea Felsted, thank you very much for joining us. When we come back, we'll talk about all things UK, including that inflation print this morning ahead of the November budget. Adam Dent joins us to talk rate strategy. This is Bloomberg.
Welcome back to the opening trade. About 30 minutes into today's session, and you are seeing a risk-off market that is everywhere, except for right here in the UK. We're going to dive into the details of what's moving it, but I think it's really crucial to talk about just the spread that you are seeing between what the French index is doing and what the UK index is doing. In almost 1% difference, Guy. What is driving it?
Well, I think it's the numbers that we're seeing, plus also the reaction to yesterday's mining story. Miners went down hard yesterday. They're bouncing back today. In terms of the highs and lowers, 294 up, 289 down. The market is completely balanced in terms of the spread there. In terms of the volume, we're a little light, which is interesting on a down day. We'll talk about that maybe more in just a moment. Highs and lows, let's talk about some 52-week highs that are worth talking about this morning. Boliden Rio Tinto, Reckitt, all tracking higher. It's interesting to see the miners, names like Rio, tracking higher to a 52-week high today. Mainly a copper business, but there are kind of other metals that it does as well. Gold has been the real kind of pivot point for the metals market over the last 24, 48 hours. Reckitt is up. It's up at a 52-week high. That stock is up by 0.4%. The China business, actually, in particular, really stands out in terms of the numbers that it has delivered this morning. But a bunch of 52-week highs, and Rio certainly doing some of the heavy lifting in the UK today, Anna.
Let's talk about some of the other big picture stories we need to keep on the radar. European countries and Ukraine are working on a 12-point plan to end Russia's war along current battle lines. This would push back against Vladimir Putin's renewed demands for Kyiv to surrender territory in return for a peace deal. Bloomberg has learned that a peace board chaired by the US President Donald Trump would oversee implementation of the proposed plan. Earnings season is in full swing now, with UniCredit posting a third-quarter profit beat this morning and Barclays launching a £500 million buyback. Meanwhile, in luxury, Hermes reports a sales beat, with US consumers snapping up pricey Birkin bags. But that didn't extend to L'Oreal, with sales disappointing across the pond. We look ahead to SAP earnings later today. And annual UK inflation unexpectedly held steady in September after food bills fell for the first time in 16 months. The data has prompted traders to ramp up bets on a Bank of England interest rate cut before the end of the year. Chancellor of the Exchequer Rachel Reeves has promised to deliver fiscal plans that help contain inflation when she delivers her budget in November. Guy?
Let's talk about the gilts. Front end of the gilts curve is moving quite significantly this morning. Twos are down nearly 9, 8.6 at the moment. So a big move, big punchy move at the front end of the curve, maybe indicating that the market is beginning to tolerate the idea that we could see maybe the Bank of England cutting rates this year. Expectation was we would be maybe looking at that at the beginning of next year, maybe the spring next year. In terms of the reaction we're getting in sterling, let's take a look at what we are seeing for the pound this morning. We did see a big reaction initially off the data as it dropped, and that has continued. Sterling is lower this morning against the dollar. Big drop, and then that has continued, as I mentioned. Adam Dents, UK Chief Rate Strategist at Santander CIB, joining us around the table. Good morning.
Morning, great to be here.
Should I warm up to the idea of an early rate cut, maybe in time for Christmas?
Yeah, I think Governor Bailey would love to give us all a Christmas present with a rate cut, and data like today's helps. On the other hand, let's not get carried away.
Yep.
3.8% is not 2%.
No.
Long way to go. And
we've got a long way to go. Plus, we've also got a budget that we need to fold into all of this. The Chancellor this morning talking about trying to figure out a way of getting inflation down in the UK. How do we do that here? What do you think the main drivers are at the moment? What are the levers that can be pulled? Is keeping rates kind of where they are the right way of bringing inflation down, or do you think there's another better way?
I think keeping rates where they are is a good start, but It's far from everything you need. One of the key drivers, one of our fears about inflation has been food and how salient that is to people's expectations. But the fact that today, as you mentioned, food prices came in softer is a little bit of relief. That could prove to be really crucial.
OK, so we watched the food story. Adam, in terms of that budget then and where the Chancellor can take action on inflation, there's been quite a lot of talk about some quite sort of interventionist measures, I suppose, that the Chancellor could take, thinking about mobile phone bills or thinking about the cost of pet care or all sorts of stories around what could be introduced. I mean, is that the way that we want the UK economy to be handled? I mean, isn't there something more fundamentally wrong with this inflation picture that we keep generating in the UK that stays almost consistently above target?
In fact, consistently above target is a really key point here. Something that's been winding us up recently is the amount of indexation we have in the UK, where benefits linked to cost of living makes sense. But when prices are sort of circularly linked to the cost of living, it can become, once you're away from target, it's self-reinforcing. Obviously, the mobile phone bills are a classic example. That's now been addressed with regulation. But you close one door, another opens. Just yesterday, on Monday, the government announced that university fees will be linked to RPI. RPI!
Wow, I thought that. I mean, it's still on the Bloomberg terminal. You can still get the data, but I thought economists had moved on at least.
Well, quite, but I think government hasn't. So indexation is alive and kicking, and that doesn't help when you're away from target.
So where does this leave gilt strategy then? If we're expecting, perhaps in time for Christmas, a rate cut from the Bank of England, clearly we've seen evidence of that shifting expectation at the short end this morning. Where does it leave your strategy?
Well, so gilts were definitely holding their breath yesterday with anticipation about today. Shorts in particular, underperforming their peers. Definitely catching up, more than catching up today. But even that, I think, is awfully short-sighted, because last week, short gilts were leading the way with this mounting sense of dovishness, of a more dovish Bailey. But I'm concerned now gilts are getting a little bit carried away with one slightly soft inflation print. Inflation can go up as well as down, and it's far from a smooth path back to 2%. Our forecasts have got inflation staying above 3 all the way through to the middle of next year, and high 2s all through next year.
And that remains the case after today.
And that remains the case. And in fact, if the bank now act more generously, that increases upside risks, arguably, to the middle of next year. So, yeah, still a long way to go.
You talk about the volatility in some of that data. I'm just looking at some of your notes here. I think what's fascinating, you have fantastic charts in your research. The transport sector has been one that is quite volatile. Can you just walk us through the dynamics there?
Well, in fact, you made a really good point there. What can we do to get inflation down in the UK? Part of it is just how we measure inflation. That's something about the way the ONS measures airfares creates incredible volatility and is a really wild guessing game. So I think maybe trying to improve some of the measurements to produce a smoother outcome might be helpful for everyone. But for me, one of the really big calls going on now is what airfares do in December, because that end-of-the-year number is quite iconic. I personally have got a 50% month-on-month increase in airfares in December, which sounds incredible, like some crazy call. And actually, that's just normal for December. That's just the way we roll in this country.
Where are you flying to?
Yeah.
Okay, so that's the transport sector. You're also seeing a little bit of a bump when you look at restaurants and hotels, which again feels like it's a tourism-driven story. But again, explain the dynamics there. I didn't realize people came to London for Christmas necessarily.
Well, hotels, very noisy. At least hotels prices seem to have gone back to their sort of pre-pandemic normal trends. What worries me in that sector is actually restaurants, which are less noisy, and they've settled around a nice little equilibrium rate. But that equilibrium inflation is more like 4% annual than 3%, where they used to be. So we seem to have had a bit of a step change there, and we've all just got used to restaurant prices rising that little bit faster than they used to before.
How far does the Bank of England go, ultimately? If we get another rate cut this side of Christmas, do I add it onto the rate cuts for next year? Do we think terminal is lower? How does this change the dynamic?
Well, really, to assess where terminal rate is, we need to know where the bank thinks neutral is. And the bank refuses to tell us where neutral is.
Where do you think neutral is?
One. We've been saying about 3.5.
Right.
But for me, every month we stay with actual interest rates higher than that, around 4.
Yeah.
We get a little bit more used to it, and neutral creeps that little bit higher. So I'm failing to find clear evidence we're actually in very restrictive territory at all now. So I think 3.5 or higher is neutral. But
so if we get an early rate cut, it's a zero-sum game here. I take one of those rate cuts and just basically bring it forward.
I think it should be like that. But it's possible the bank have just got this mindset of we keep easing until we have a reason not to.
Yeah. Adam, these are different parts of the bank's remit, I know. Monetary policy is one thing, talking about fiscal, risks in the market is another. But we've heard a lot about that latter thing recently from the Bank of England, whether it's bubbles in AI stocks, whether it's fears around credit markets. How do you square all of those worries with the fact that we might see interest rates being cut in the UK? Or are they just so detached? Is the bank able to explain that, do you think?
Well, unfortunately, interest rates are a very blunt tool, aren't they? And as you were saying earlier, are they the right way to deal with inflation? They're part of the story, but not the whole story. It's reassuring to know the Bank of England are constantly on alert to tail risks, to new problems, and are trying to deal with those with sort of surgical tools. And maybe that can leave interest rates to focus on inflation, although I think interest rates are just coming down almost regardless of inflation at the moment.
Adam, great to see you. Thanks for stopping by to see us. We really appreciate it. Adam Dent, UK Chief Rate Strategist, joining us from Santander CIB. Coming up, we're going to talk gold. Yesterday was quite the day, steadying a little bit today. Gold miners have bounced back a little bit as well. Ollie Hansen, Head of Commodity Strategy at Saxo, is going to be joining us next. This is Bloomberg.
The main risk for gold will actually be an equity drawdown, consistent with what we saw in 2008 and 2020, when basically, multi-asset investors had large gold positions. They sell the gold to fund margin calls in equity, right? Yeah. So I think it's would be an equity-driven gold decline rather than vice versa. And the question is, what do you see there? We'll know a bit more after earnings season, but in fairness, earnings have been pretty robust thus far.
All right, Peter Kinsella, their investment services head at Union Bancaire Privé, speaking to us yesterday. And I should say, those comments came before we saw the rout in gold. He says that if there is one to come, it would be equity-driven. We didn't actually see that. The rout in gold, however, seems to be, we'll call it easing, although it's certainly not pairing the losses that that we saw from yesterday. Let's take a look at gold spot, which is higher by about 0.4%. Again, 41.39 on the precious metal. Silver higher by 0.5%. But I wouldn't necessarily call this a buy the dip kind of moment in gold. But we are still, of course, far from the lows that we saw earlier this year. Let's get a little bit more analysis on how we got here. Ole Hansen, commodity strategy head over at Saxo Bank, joins the program. Ole, pleasure to have you on the program this morning. Thank you for your time. Let's just do a little detective work here. What do you think sparked yesterday's 3 standard deviation move?
I think it's quite clear that, first of all, that this was something the market's been starting to worry about. We cannot have a market continue in a straight line for this time, especially when it comes to some like metals. So I think while Indians are celebrating their Diwali, the rest are suffering a slight hangover, and I think that's really what triggered it. That the buying out of India paused, and that has been incredibly strong this season, and that was really one of the triggers. Together with that, risk back on in the stock markets, dollar slightly stronger, all just recipes for a correction which was bound to happen sooner or later.
Love that the holiday is taking the beating here. Ole, I kid, of course, but talk to us a little bit about the cross-asset correlations, if you can. We've been having this debate this morning about whether the gold move does ultimately, if we see a continued move to the downside or the upside, have a ripple effect into the equity market, the bond market, et cetera. In past iterations, it has. Why are we not seeing a bigger cross-asset correlation this time?
I think simply because the rally in gold and obviously also silver has been just so phenomenal. And with that in mind, when you have a big move like 50+%, then obviously a 10% correction is something that you have to live with. And I think that's why the impact there has been relatively small. But I also heard what Mr. Kinsella said, and I agree that there is obviously some deleveraging risk if we do see a correction in the stock market. But I do note as well, even though we're flying blind right now because there's no cut data coming out of the COMEX gold market in New York, we're seeing open interest actually coming down. So that tells me that potentially, even though we've seen a strong rally in the last 3 weeks, speculators hedge funds have not really been that actively involved. So I don't think the length in the futures market is so great that they could trigger a deleveraging rush. So perhaps we've seen most of it. It's encouraging to see that 4,000 held overnight, and that actual buyers started to come back in the Asian market, and that really has been the major driver recently.
Ole, good morning. So just to be clear, you're still bullish for 2026 on gold and silver. How high do you think they go?
Well, I wouldn't rule out that we see 5,000 at some point. Obviously, now we have a slightly bigger mountain to climb, as we said that we come back by around 10% from the highs, but I think that's still manageable. We obviously still have to focus as the world as it is right now, and there are plenty of uncertainties out there that may worry investors, and I think there's been increased phone calls to asset managers in the past few months from investors saying, well, how much gold do we hold? And when the answer was nothing, I think that probably eventually forced some reaction from asset managers. And I think that process is ongoing. So we will see buyers on dips. The housing market in China is in a 4-year slump. Investors there look for alternatives, and gold is one of them.
Yes, we were talking to a guest from our Markets Live blog earlier on who was talking about how some central banks are still underweight gold versus the exposure that other central banks have. And so she was expecting to see a lot more buying from central banks still, even though that's been a theme for a while. Is that a view you would share?
That will be an additional driver. I do question whether that the strength we've seen in the past 3 years, whether that will continue, simply because the value of the gold positions has risen so fast as they have. So maybe the need to accumulate at the pace that we have seen in recent years may start to taper or may fade a little bit. But with that in mind, I think we're also seeing then the ETF investors, especially in the West, they've been taking up the baton and carried the demand forward. And I don't see any reason why that suddenly has changed. We've got 2 major Trump meetings on maybe not coming up in the next 2 weeks. That potentially could set the short-term agenda. But generally, the worries that investors have for the world as we see it is something that will continue to attract demand.
OK, so let's factor that into the debasement trade. What did yesterday's price action tell us about whether or not the debasement trade is real or not real?
Mike, I think it's real. I think it didn't tell us too much. I think the debasement worry is real, but I think also the market was getting to the point where basically was left struggling to move forward simply because we've seen this very, very strong rally. So this initially is what you can call hot money that's coming out of the market, recent entrants that needs to reduce their exposure. But what to say is that during these corrections, that's really where we find the strength of the market, because obviously there needs to be a bias that steps up to the selling that's coming in from these speculative types of trades.
Yeah. We're at 41.44 right now. Is there a price you'd buy at? Where would you buy the dip? Do you think the dip carries on for a while? What's the short-term tactical thinking?
39.70 is the 38.2% retracement of the August to the rally or the peak we saw last week. That obviously, if we hold that level, that would reflect that this correction is just a very mild correction within the strong uptrend. So that is the, I would say, to me, the line in the sand for now. And likewise, if we do take out that 4,400, then additional momentum buying will emerge. But I think we are probably due a period of consolidation here that could potentially last quite a long time. And the longer it lasts, I think the better the foundation for the next move.
Ole, thanks for jumping in. Really appreciate your time as ever. Ole Hansen, Commodity Strategy Head, joining us from Saxo Bank. We're almost done with the show. It's like 50 already. It's flown by. What else we got coming up for the rest of the day? 1:25 p.m. Lagarde's going to be speaking in Frankfurt, I think. After the close, I think we get Caring today. You've got a 20-year auction stateside. You've got IBM, Tesla, SAP, all to factor in to your thinking a little bit later on as well.
Yeah, so certainly tech themes to the fore when it comes to the US earnings story. Other tech news we're focusing on, OpenAI has unveiled its first artificial intelligence-powered web browser, ChatGPT Atlas, which will compete directly with Google, it seems. The browser offers a personalised web experience with features like an Ask ChatGPT sidebar to engage with content and perform tasks. Let's get more on this. Matt Bloxham, analyst at Bloomberg Intelligence, joins us. Matt, very good to see you. Yep. So how bad is this for Google Alphabet? Clearly the stock fell a bit on this yesterday. But then some of the commentary I've been reading this morning suggests that this isn't anything that Google and its own AI tools aren't going to be providing soon. So what's the challenge?
Yeah, I think that's fair. I mean, it's a clear sign that OpenAI is very much taking the competition to Google and everything they do. But as you say, the Google Chrome browser and Gemini, it's a natural evolution of that. Google's already put Gemini capability in the summarization tools at the top, so they're kind of already thinking about this. But it just shows you, how intense the rivalry is. I mean, not so long ago there was a risk that Google's going to have to sell Chrome, and OpenAI had said that they would have been interested in buying it if it had been a forced disposal. But yeah, this isn't the first of these rivals to come out. We had I'm going to say Perplexity. There's Perplexity, Anthropic. There's so many kind of names going around, but Perplexity and their kind of similar browser with AI integrations called Comet. So there's a very kind of space theme to these new things, Atlas and Comet. But definitely more of these things coming out. Some of the interesting things are it really does incorporate agentic AI too. So you can, in this sidebar, ask it to kind of book travel for you.
Yeah, take over your mouse, keyboard, all sorts.
Yeah, exactly. So it's quite sophisticated. I think in the short term, the impact will be limited because it's only available on the iOS, so the Apple platform, which is obviously a very small part of the kind of PC browsing environment. But they do say they've got Windows equivalents in the works. We'll see when those come, because that'll be when it really scales.
Speaking of Google, we should talk about the fact that even though there is so much focus in AI, cloud adoption is still not exactly, we're not at 100% of that just yet, which brings us nicely to Google offering its cloud services, or at least reported to be, in a multi-billion-dollar deal with Anthropic. But I thought Anthropic was an AWS subscriber, that they had backed them up. Can you just explain the dynamic there?
Yeah, sure. So we're still waiting for all the details to emerge of what this deal looks like, but potentially worth tens of billions of dollars of cloud capacity. Now, both Google and Amazon are dollar investors in the business, so they both have skin in the game. But yeah, historically it's been AWS that's kind of been really the kind of core platform. So again, it shows that Google is looking to kind of, I guess, maybe hedge its bets, boost its cloud business, which is number 3 behind AWS. It's number 1. And I guess, from Perplexity's side, it's kind of looking to diversify where it gets both its cloud computing capacity and also its chips. Obviously, we saw AWS had that big outage early in the week. So, there's kind of a motivation for all platforms to be getting resilience in what they do. And obviously, there's limited capacity in chips on every platform. So the more diversity you've got, the more you can push forward. And who knows, maybe the Google chips are going to work out to be better for their AI.
The margin story here is fascinating in terms of who's making money and who's not making money in terms of that story. The Oracle narrative around that is really interesting. Netflix is down pretty hard overnight. Is that an overreaction?
I think it's a reaction to the fact that people had very high expectations going into the quarter because they had a really strong slate of content this quarter. They had a number of really popular kind of live events, including boxing. So I think although they delivered really good revenue growth and they've kind of kept the full year outlook in terms of revenue where people thought it was going to be where it was before, I think people were looking for a surprise on the upside, and we didn't get it. And obviously we've had this kind of Brazilian tax issue, which I think is a bit of a sideshow. That's going to squeeze the profit. They've said it's not going to impact cash flow or any midterm profitability. So I think it's more the disappointment that the investment in content, the big slate, didn't really deliver a little bit more than people already expected.
Now, Matt, let's finish our conversation. I'll give you a choice. You can either look back to the ITV story. I say back, only a couple of hours, but we've had ITV move on the back of Liberty Global's intentions there, or look ahead to SAP earnings. Where's your focus?
Wow, goodness. Well, let's look
choice.
at... Yeah, I mean, the ITV one is interesting because Liberty have had that stake in ITV for a long, long time. And, I mean, Liberty is looking at all sorts of...
More than a decade?
I think it is, I think it is definitely more than a decade. And everybody always wondered at the time what the intentions were with that investment. So it sat there, and obviously over that time, ITV's lost a huge amount of value. Now, Liberty Global itself is talking about all sorts of ways to reduce what it calls a conglomerate discount in its kind of various assets across Europe. And so I think this is part of that plan to actually kind of tidy up the portfolio, crystallise some money where they can and put it to better use elsewhere. Because obviously quite a few of their businesses, including in the UK with Virgin Media, investing billions of dollars in fibre infrastructure, so maybe they can put that money to better use.
Matt, great to see you. Great choice, by the way. Anyway, I'm sure we'll deal with SAP a little bit later as well. Matt Bloxham, analyst at Bloomberg Intelligence, talking us through some of the news we have had out from the tech space. I guess you can include Netflix in that space, but we're going to watch out for much more coming up a little bit later. Talking of things we're watching out for, Thomas Burnham, the Irish Minister for European Affairs and Defence, will be joining Francine on the Pulse 9:45 a.m. London time. Looking forward to that conversation. We've had things move this morning. I'm trying to work out a lot of earnings to fold in. What's our takeaway? Banks have done well. Barclays generally was a bit of an outperformer. Miners have come back but not filled the gap from yesterday.
Consumer-facing companies are struggling.
Luxury stocks have had a really tough morning.
And also the sort of lower end of the scale as well. The likes of L'Oreal and Adidas.
Yeah.
Both of those not delivering a share price rise this morning.
I think it's very simple. It's a sector rotation. That's literally all there is to it. It doesn't feel like there is a consistent earnings story across all earnings. We can't say margins are getting compressed across the board. We can't say buybacks are across the board. It is quite literally sector by sector. And a lot of it seems to be valuation driven. But that read-through from gold, I haven't seen it yet.
No, the Bank of England might be cutting rates early is my other takeaway from this morning. Anyway, we'll see whether that happens. The Pulse is up next. This is Bloomberg.